Hi, everybody. This is Todd Toback.
And this is Evan Harris of PrivateMoneyMogul.com. Todd, today we're going to talk about a property near and dear to my heart, and I know yours, Chocolate Summit. Can you please put the images up there on the screen?
Sure, we'll throw them up here, Evan.
Awesome. Now, if you could, Todd, just kind of set the table here and explain, how did this deal come to be? How did it get to us?
Well, this is one of those deals, Evan, that come by, I don't want to say once in a lifetime, because, when you work hard, really, really good deals come your way. But this one is exceptional, and it came to us through a real estate agent who we have a relationship with. Property is a fantastic area, 2.5 acres, wonderful views, built in 2005, 4-bedroom, 2-bath, just a phenomenal property. And the issue with this house was it didn't qualify for conventional financing because there was some litigation involved between the city and the previous owner. So while everyone else was spooked about buying the property, we saw an opportunity to come in and buy this property for cash. Now, when my real estate agent came to us and said that I could pick up this house worth $500,000 for $187,000. First thing,
$187,000, Todd.
$187K.
For the listeners out there that may not be from San Diego, maybe from other places, in San Diego there are not many places that exist for under $200,000. And if you're seeing the images on the screen, the houses do not look like this, and they typically have no human beings living inside. And if they do, those human beings are not allowed to be living inside at this time. So this is not a normal type of property.
So at this point, I'm pitching myself thinking this was too good to be true. We had it closed in 7 days. We moved on it right away, locked it up under contract, and the whole entire time we were closing, I'm thinking, this is not going to close. This is no way that we're going to pull off this deal. Well, because we had the cash, because we closed quickly, because the cash flow was going to be so strong, we closed it in 7 days, and we decided, Evan and I decided to hold the property for the foreseeable future. We decided 5 to 7 years, and I think the investor agreed to the same time frame. So basically got a private loan after we closed cash, and our payments to the lender who put a first trust deed on the property. And if you don't know what a trust deed is, it's where a lender makes a loan on the property, and their security for the loan is the property itself. So the investor came in, funded the loan. Go ahead, Evan.
Back up one quick second. The lender and the investor, one in the same?
Well, let's call us the investors, and then let's call the lender the person who actually gives us the money to buy the property.
Perfect. So instead of sending money to a bank in the form of a mortgage, you're actually sending checks to a regular person that actually has some capital to invest, looking to make more money on their money and get a good interest rate.
That's right. So we had a private person out there, who had a couple $100,000 in the bank, who wanted to earn more than 0.0045%. And they basically lent us the entire purchase price because of the strength of the investment. And now we're paying them a check every single month, just like we would the bank.
Perfect. Now, Todd, what was the next step? How did you decide, or how did we decide, whether to hold, whether to sell, what to do with it?
Well, this one we had a lot of options because there's $300K of equity in the property. But the other issue is that this property is really strong cash flow. About $1,400 a month. After repairs and everything like that, we're probably looking at maybe $1,100 to $1,200 a month. So we're thinking, well, do we sit on this cash cow or do we sell the property? Well, at the end of the day, we just thought the cash flow was too strong to give the property up. So we decided we're going to rent it out. We're renting it out for $2,650 a month. Tenants are responsible for just some landscaping and some minor repairs, so our expenses are also cut down a little bit on the property. And we can sell it 5 to 7 years down the line when the market comes back. And hopefully it will be worth a whole lot more than it is now, but either way, we got about a $300K equity cushion, which is always nice.
And that's obviously even more safety for the person that's lending on it.
Yes. Now,
right.
Lenders, if you're looking at this deal and saying, I want this deal, I don't want to lend. Well, think about it. If you want the actual investment instead of lending, it's probably something good to lend on. That's something that one of my first mentors in the lending business told me. If you see the deal and you want it, then you know it's the right deal to lend on.
And if you're bringing us a deal, there'll be even more to be shared. So if you're finding deals like this, you're amazing. Keep doing what you're doing.
Keep doing what
But
you're
if
doing.
you don't find deals like this, you can partner with those who do find deals like this.
Sounds good. Any other questions, Evan?
I think we're complete. Anything else you want to add on the Chocolate Summit property?
No, I think that's a wrap. If you're interested in learning more about private lending, or if you have deals and you want to bring them to us, just leave your name and email address on our site, privatemoneymogul.com, and we would love to hear from you. Have a great day, and that's a wrap.